Hello, welcome to the XCCPA channel. You're on the tax planning series. Today you're on tip number 9. So far we have talked about how to maximize deductions, we have shared with you deferral strategies, and we have also started the topic of income shifting. Now today I'm going to share with you one of the many shifting strategies, that is how to shift personal income tax to a corporation. So please stay tuned. Today we're going to talk about what are the benefits of having a corporation, specifically C corporation. I know in our video series we have mentioned multiple times about S corporation, but today we're going to focus on mainly C corporation. So the first benefit is lower tax rate. As a C corporation, you're taxed at, under the current tax system, 21%. So imagine if you are an individual, high net worth individual, you are currently taxed at 37%, or sometimes it could be higher depending on whether you have additional Medicare taxes or other form of taxes. So shifting it to a corporation that only pays 21% is going to be advantageous. I know it's very common that people commented, if you're a C corporation, you're being double taxed. There are actually ways to avoid the double tax position, the double tax situation. For example, if you maximize your salaries or you look into ways to maximize your compensation in a specific year, then literally you do not have to pay taxes and you could avoid the double tax situation. The other advantage is also having a C corporation allows you to defer your dividend tax to whenever you're ready to withdraw the money. So as a C corporation, whenever there's surplus cash and if you are a shareholder and if you want to withdraw the money out of the corporation, you will have to pay dividend tax. However, it works a little differently from S corporation, because as an S corporation, you are taxed on your profits. So regardless of whether you take the money out or not, you still have to pay taxes. Now that is not the case for a C corporation. So the last advantage, which is an important advantage, is fringe benefits. Now if you run a C corporation and you have group health insurance and you're 100% shareholder, it is actually deductible. Education assistance is also deductible if you have a policy for all your employees. And if you have an S corporation, it works a little differently. For those of you who are S-Corp owner, you know that health insurance works differently, and a lot of times you actually don't get the full benefits compared to if you have your group health insurance plan under a C corporation. Now, word of caution, having a C corporation is not as simple as just running a limited liability company. It does come with more, compliance requirements, legal requirements, such as, you have to make sure that you have your annual meetings, have your board meetings, and it requires planning and time for proper execution. If you're a business owner and you're an active entrepreneur, and you have multiple businesses, which is a very common case for active business owners. You start one business and in a couple of years you see other opportunities and you start diversification, starting another type of venture. So at some point this topic will come out. Should you have a management company to provide services to all the different entities that you own? And you could do that by having proper management contracts. And I have talked about all the benefits, and if you feel like this is a route that would help you increase your tax savings, definitely reach out to your CPA. As usual, if you need a CPA to talk to, I encourage you to pick up the phone today. It's 832-295-3353. Thank you so much for following this tax planning series. We have had a lot of fun developing this. We hope you like it. We hope you watch it and draw the benefits from it. If you want to support us, please like, subscribe, and hit the bell notification, and we'll very much appreciate it. We'll see you in the new year. Happy New Year. Goodbye.